All right, so let's jump into it. 10:28 on the 23rd of October, Thursday. So tick it along, and we are again still not really sort of seeing much data. What is all this sort of? This is just sort of refresh this thing here now, so it's actually caught me a little bit off guard as well. PPVI input, output, and that sort of June data. What do we get? Like 6 months worth of data all sort of popped out in one go, or something like that. Interesting. That wasn't on the cards previously, and yeah, it's very odd. You never sort of see these things sort of come out like this. So I've literally just hit refresh on this, and it's caught me a little bit off guard just to sort of see that data pop up on the screen like this. Anyway, look, let's have a look at a couple of bits and pieces. Actually, it's not really too much to say. Let's look at something we haven't really got anything to look at. We got CPI from sort of UK happening, and they expected a tick up, and it came in a little bit lighter. Well, came in exactly lighter than expected, but held flat. And actually, the core looks like it's ticked down a little bit. And whatever RPI, what's RPI? Change of goods service pressure. Okay. Anyway, yeah, so a little bit sort of cooler. It has come in, as you can see, it's marked in a red there because they're sort of saying that obviously, you know, what I mean, with a cooler CPI, the reaction from the central bank would be, okay, well, you know, it's not moving out of control, so we don't need to hold rates higher. So hence the red color would be, in theory, a little bit weaker for the currency. I'm just having a look how this matched up. Yeah, and we saw a little bit of a jump on DXY around that time as well. Short of that, we've got a little bit of data coming out today for Aussie. I saw this before actually. Business confidence tentative. It's like they want to sort of be the mystique of like the sort of like the Japanese data or the Chinese data or something like this perhaps. But yeah, again, it's not really going to be anything that sort of really moves the market. And short of that, we haven't really got anything. So I mean, even though it's tomorrow, what we're looking for is CPI out of the US, looking for a little bit of a tick up there, which can be somewhat relevant for today because obviously with the expectation of this being a little bit higher, just like I said with the GBP before, if it does come in hotter, well, it's going to be a little bit more sort of bullish and a little bit stronger for US dollar. And so we may see some sort of positioning sort of through this session and maybe sort of more through US sessions tonight. All right, let's jump onto the chart. So, gold, this has been one of the trades, this one here. So, if you have a look at sort of, I think it was Monday's, what day is it now? So it must have been Tuesday's video. Um, we had this big double top sort of forming. This was where the level where we were at the time, and I said, look, you know what? If we take out this sort of 43.30, first target was obviously to sort of just come back down here, low 42s. If we break that 42, we got this big double top sort of move to the bottom side here. Price target smashed, came through here, and obviously found support on a bit of a confluence of things. So we had obviously 4,000, big psychological level. Everyone's like, oh wow, I mean, with these big numbers and that. It's funny. I had a mate actually say the other day because I put a post on X and I said that you know it used to be a big thing, like when gold would take out a hundreds level, like 1900, wow, 2200, wow, and like yeah, a big thing, and you could sort of go, okay, it's got to run $50 over, and then it'll sort of come back and yada yada. It just doesn't think twice about it. I go 41, okay, let's go 42, but whatever, 43. But it made sort of like I think jokingly, but I mean it does seem to hold true. Thousands are the new hundreds with gold, and it has been absolutely rocketing along in that. And so you've got to, one thing I've noticed with gold is you need to adjust to these sort of things in the sense of sort of like the speed and the rate in which this thing moves now. You need to accommodate that with your position sizing. So whereas in the past you may have traded, you know, 3 or 4 or 5 contracts or something, now you need to trade like, you know, 1 or 2 kind of thing. And you need to sort of slow that down a little bit because if you get on the wrong side of it, it can move very quickly and it can blow out positions very quickly. And likewise, if you get onto something that runs like this, I was short through this period here. I shorted a bunch down the bottom here. Luckily, sort of got out and then sort of faded up to shorting at the top over here. So 43.79 was my top short level, which you could see is right up the very top here as it came back into this tip over here. So that was a little bit of a close your eyes and go kind of thing because we're coming into this resistance here. But I said, look, potentially we did have this double top forming. Anyway, point is that You don't need massive positions when gold is moving like this. And, this is obviously very quick, very fast, but just as equally, look at the size of this move here, which was just pretty much in one direction. This went from 39 to nearly 44. So, there's a $400 move in that move just there. Yeah, this may have sort of come in quicker, sort of like as in these, like, came in the space of, a quarter of the time or something. But the point is that sort of like both directions, you don't need a massive position in that, and you could actually sort of do quite well. So you need to accommodate that for the position sizes. In terms of sort of price action and structure, we could sort of say like, I've been doing these sort of daily notes, and it's hard to sort of say these things and you're like, oh, okay, well, it's obviously incredibly bearish here. But all in all, it is still bullish intact from its straight technical standpoint because, here you kind of pull back lows. And yes, you sort of took out, this is on the 4 hour, but if you look on the daily, they're your lows here around this sort of 39.50. So technically, here's a low as you pulled back, moved up. Well, here's your pullback here. So in theory, you should be sort of seeing some sort of structural move like up, back, and then a move like this. And this could obviously still break as well and come down through here. And then obviously taking out 4,000 is going to be a big level, and that's when you're going to see some fireworks going through. But I would sort of tend to sort of say that I reckon we could potentially get a little bit of a flare up here before we break this. Because obviously, look, this is a trend. It's quite a strong trend in that. Like, it's been sort of in there for the last 2 months or so. Let's get some of these off here. And you could see this thing sort of like at the moment, it's obviously sort of tightening up. I mean, it was a big sort of move on Asia Open yesterday. But it's tightening up in size in the sense of the body candle. I wouldn't be surprised if we get a little bit of a sort of move up, take out that previous high, if I can draw this thing, hit possibly these lower levels over here around this 42, and then that be the time that we sort of come back through here, go through the trend, and confirmation will be underneath 4,000. So there's a little bit of work to be done with this thing here. But the reason I say that is because if we look at how the price action happened on the 4 hour here, so think about this as your first sort of sell down move here, exactly as we sort of saw on the daily there. So put it on the 1 hour, might be able to show it a little bit better. Here's your sort of sell down, and the bounce came up, took out all these highs, and once it had taken out those highs, bang, sold down again and came down quite strong. So the idea is basically you've got the big sell down. Here are your sort of bounce highs. Here's that first sell down, bounce high, came up, took out those highs, and then sold down. There's a plausible idea that you could see the same with this move here. So as in, here's your sell down, here's your bounce high, second effort down, and think about this because the structure has had 2 attempts to get down underneath this thing. Now, this is what I talk about every day. That sort of, you're down, you found support, found resistance, there's your third leg. Well, your third leg hasn't actually sort of made a new low. It's actually given you a bit of a double bottom. So now the emphasis is now on this high over here. The emphasis is now sort of placed on this high. And if we can see that kind of repeat structure, you could see this bounce come up like we saw in the lower time frame, take out that bounce high, whoops, come back to a sort of a point, like a sort of little, previous support, take out the bounce high, and then start to see the sell-off again. So the fact that this has sort of had its second drive down, this move through here, and it has been unable to put in a lower low in this particular straight move here, to me, the emphasis is now back on this high over here, 41.60, which is the bounce high we saw yesterday. So I still think ultimately we probably will be going lower, but I'm open to the idea that you could flush a couple of positions out first and get a better short position from around that sort of like 41.80, 4200, that kind of zone. But I think certainly once 4,000 gets taken out, I think that's going to be quite significant because you've got this little support through here, 39.50. So maybe 39.50 would be a better confirmation, just given how strong this thing has been. But under 4,000's psychological level, it takes you past these previous lows where we've found all that sort of buying action coming in, and also takes you outside or underneath, confirmed underneath this trend. So there's three sort of factors that I think sort of like, if you sort of stack those things up, we may sort of see a little bit more of a, oh, okay, let's really sort of chill out off that. And then we'd be looking down at these previous levels, sort of 38.50s. We could draw the fibs over there, sort of see where we sort of line things up. Actually, we probably have a fib over this already, don't we? Yeah, so 30, 39.70 here. Yeah, so 38.50, that's the kind of next level you'd be looking down underneath here. There's that little arrow gone? Underneath this level down. Not clicking hard enough. That kind of trade just down underneath here. So look, there's obviously a bit of work to be done, but in short, the fact that this little move here coming down, support, resistance, second drive down here has failed to actually get through. It's now given us a double bottom off a trend. To me, it puts the focus back on this side here. If we take out that high, well, yeah, that could say we're going up here, but then you're running into this previous resistance bottom of that box again pretty soon, and I think that will provide a bit of a sell down. And I mean, we'll deal with that bit as we get to it, but I think that's sort of that's pretty much the structure that I'm looking at with gold in the short term here. Flip across, we got Aussie. This thing is not liking my ticks today. So the plan on the Saturday, or the weekend review, was a move up until these zones over here. So 25, 25, sorry, 25, 65.20s to 65.30s. We moved right up into it and bang, sold down beautifully. So we've sort of come back here. It's kind of sitting a little bit in no man's land at the moment. Like, I said, look, there's a potential that we've got this big range sort of setting up through here. Ranges tend to have a midway point. As you can see, sort of through, if this is the range here, you can see this support, 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 support. This is kind of holding pretty well here. So should this sort of level down here, 64.80s, get taken out, we got 4-hour support levels and that's through there. But most likely, I would say that you would probably be sort of at least targeting 64.50s or possibly down to 64.40s. Before potential breakdown underneath short 64.20. So as I said, we've got US CPI tomorrow. If we do see a little bit of a hot print, if we do see a little bit of a sort of positioning for that slightly hotter CPI, which would be US dollar strength, this could be what would weigh on Aussie getting down under here. Now, you may see some early positioning and it may sort of come down here. Look, a little short-term confirmation will be finally closing underneath 64.80 because it's really very tight through the sea. It's like pretty much sideways, consolidating here. And if you look at it on a daily time frame, it's like the last week or so, it's just been ping pong bowling up and down here, but it's consolidating and it moved into it in a negative move. Well, a consolidation favors the direction in which the market moved into it. So I mean, look, nothing's ever guaranteed. It could definitely move and come up out the top over here. But the fact that it's consolidating in a downward move favors the idea to come down towards the bottom. We do have obviously back forth. The buyers took it up, sellers took it down, and then sellers also took it down 2 days in a row technically now as well, because you can see that obviously you tried to get up above 65 there and bang, they sold it down. So as I said, 64.80 I think is going to be a crucial level. If we start to pop down underneath that or underneath sort of like, the 70s, I would say bottom of that range is your first target, 64.40s. But 64.20 is really the level that I'm really kind of looking at for Aussie. Like, it has been very strong, as you can see. If you take it back all the way through here, the 64.20s, it's provided very, very much a lot of support there. So I don't think that is going to break first time, should it move down towards here. Doesn't mean it can't, but I would say more likely you're probably just going to see this come down here and then see some rally attempt up over there. But, with hotter CPI, DXY moving towards its price target, not quite there yet. I still think there could be some weight on Aussie for the downside here. Speaking of DXY, have a quick flick across here because we had this inverted head and shoulders, which broke nicely. I think it was over the weekend or some time I put this up over. But we were coming up around here. Was it? Must have been around this point. No, it must have been here over the weekend. So it's Monday, Tuesday's video. This inverted head and shoulders, which are called, break out over a 98.70. Broke beautifully. I've updated a couple of the resistance points through here, but as you can see, the measured move is up around sort of 99.20. We do have a daily up around 99.30, so that's pretty much the zone that I'd be expecting market to be sort of targeting through here. So a little bit of a set. Look, we got a bit of a sell down here. It's like a little test above 99 and then smacked on the nose pretty quickly. I don't think it's enough to sort of derail this move. I think certainly if you get back up and you test that 99, you're going to get that pop. But certainly up into this zone around here, whoops, here, and I would say top shoot over here. These are the kind of levels that we'll sort of be looking at, and then probably see a little bit of a sell down here. So you got your measure moving at 99.20. You got daily resistance at 99.30. And then you got body fill at 99.40. So, there's a 20-point range through here, but I imagine this to sort of come up into this zone and then to sort of sell back and see a little bit of a sell down here. And this would go in line with Aussie having a little bit of a dip down underneath 64.80s, and then possibly sort of finding some support as these sort of charts both come into their support and resistance at the same time. Flip across, we've got silver. So silver played very well as well. Like this was again, if you have a look at the analysis on Tuesday, I said this is going to be very crucial, this level just here, because we had a big confluence going here. And this is the beauty of these things with the confluence. Like when you got, the idea is basically that you've got one segment of the market that is watching one thing. They're watching this trend line in this instance. You got another segment of the market watching this horizontal, which was the neckline of the head and shoulders, which, sitting through there. And when these things all collide at the same point, you can tell that, quite a few segments of the market are watching that. You're going to get a reaction, whether it be sort of coming into it and it being a support or a resistance, or whether it actually breaking. And as you can see, this thing dribbled into it. Once it broke, bang, this thing absolutely got annihilated. But this is the plan that we had come the weekend. Back into the support zone, around 48, I think I said 48, 49 or so, whatever, into this big zone that we've had marked out here for quite a while, back underneath all-time highs, so it's the second ever, you can see that they tried to hold it. They bounced it back up above those previous all-time highs, but then second effort, bang, they sold down through there. So it's found support, it's consolidating the lows, so again, same similar thing, it sort of favors the idea of a push lower, but I'm also open to the idea of something similar to gold, in which we get a little bit of a rally up and then a move down. The reason being with that is because obviously you're seeing it's tried to reject support and hold here a bunch of times. Look, this could just do dribble and then go bang. If it does there, then I would say we're going pretty quickly down to 45.80 and then 43. So they're the two little price targets I'd have underneath here. Should this thing just dribble and go. Because that's basically what this move is here. I don't know if it's technically or whatever it's called, but it's got a waterfall or something like that, which you can see. So like water coming along here and then dribble, 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 like on a ledge, dribble, dribble, and then bang, you're going to see another big, sharp, fast move down to the downside here. Now that's definitely a possibility, which makes taking positions at this point kind of risky. But the alternative to that is that we do see a bit of a rally up. They take out the people that have sort of been short here, put their stops above this bounce high. So like, think about it, like your stops are, wherever you've entered in this bit, we've got head and shoulders, break of the trend, come down here. It doesn't matter where you entered. You could have entered down here, could have entered up here, protecting yourself. You put your stops in just behind the highs. So stops, let's look a bit cleaner. Stops, anyway, whatever. They put their stops in just above the highs, come up and take them out, and then run it down. Structurally, I would say that's probably a higher bet that we see a move similar to this. But again, as I said, if this just decides to just go now, and if they think about it, because like, you know, if you're sort of trading structurally, this is how it would work, because you take out the textbook stops and then on with the show. If you can't even rally to take these parts out, you don't care about that. People are just getting out at all costs. I don't care what happens. I want out of silver. Yeah, we could sort of take some people and then do this and yada yada. But if they just go nut, we just want out, that's going to move very fast. So the two options here are really take out these lows and just a quick move, and we're talking probably, you know, at least two to $4 move, yeah, $2 to $4 move to the downside if you take these things out. If you move up here, your first target is obviously just coming back to these lows, but then if you break those lows, again, they're still your targets. So look, I've been saying for a while, you know, to my own detriment as well, that I sort of thought silver would be coming back down to mid 43s, let me start that again, early 40s, around 43. But you know, we'll see how this one goes in that. But I wouldn't be surprised if we get, as I said, a failure to break through here a couple of times, a little bit of a cheeky move in here, because again, in this kind of instance, people would move up. We've bought the lows. Look at us. It's still super bullish. You know what? I'm going to buy it. I'm going to put my stops underneath here, and then bang, they get taken out, and that's what will feed this. Hold on, let me just fix that up a little bit. Come down here, you buy this zone. Oh, now it's going back up. Your stops are underneath here. That's when you see this sort of go, okay, boom, feeds here, and that's what feeds that move to come down like that. So yeah, it's not a straightforward call at the moment. It could very much go either way with it all. I'm leaning into the favor of the short-term bullish, just to sort of drag in some more stops. I don't think we're coming back up over here. That's my thing. If we do get a move up, I'm going to be looking to short into that because I do think that we are coming down over here. Cool, and have a look at a couple of others. Copper's actually holding up very well. I mean, it's just found itself a little grind zone through here. So let's just put a box around this. That is where you're going to see some direction. Because I really thought this would be sort of taken down a little bit. If we do see that next leg down on the metals, maybe then. I've been saying that for a bit. 4.7 is where I'm looking. I think that is where it's going to come to. But for the time being, it's actually quite resilient, given everything that's sort of been going on. And then finally across to yuan, which is absolutely chop, chop, chop all over the place. Put on a decent time frame so we can see. Pretty much playing ball. So when we had this inverted head and shoulders coming through here, I said, look, if we don't break through this, I can't remember, was this one here, or maybe, no, it must have been this one here, because I said, look, we've come back down or whatever. I said, look, there's a good chance we go into a grind, and that's exactly what we're doing. It's really trying to hammer down, hammer down, hammer down, but as you can see, they're not allowing it to sort of close underneath this sort of 412. 412. I swear I've got some sort of level of dyslexia. 712. You can see the chart numbers on the charts anyway. The point is that at the moment it's holding, it's oversold, it's tipping back over. There's a good chance that we see a bit of a move up over here. This goes in line with most likely a little bit of US dollar buying across the board. Aussie down, possibly sort of see what happens with gold as well. But DXY up to the top side here. So I still think we have upside over here, but of course this has been incredibly stubbornly strong, and for the time being it's holding. So I think most likely we'll look on a 714, just given the fact that we're oversold tipping, and also this looks like a bit of a bit of a range forming. But certainly if you take out those wicks at 7116, that's your trade back down to the lows over there. All right, that's it from me.